Let's get it going with a trader rundown and Joe Tigay of Equity Armor Investments. How you doing, Joe? Are the sellers in the market becoming exhausted?
That's a great question, Angie. So, we saw accelerated selling to start the year in January. That was coupled with high volatility. We saw the VIX really start to rocket higher. Now, lately, the market's kind of stalled out. We had a comeback, of course, from the lows. Market's kind of stalled out. We're in a interesting zone, whether or not which way we're going to go from here. But as we're going lower a little bit slower than we started the year. And interesting to see, we're not seeing that spike in volatility as we go lower too. And that makes sense because, of course, the ranges are a little bit tighter now, and these drops are not as violent as they were.
How are investors reacting to earnings news?
Yeah, so we're getting through this earnings cycle. We're starting to see a real difference in types of companies, and it's becoming more of a stock pickers market. So we're seeing companies be rewarded that are generating a lot of revenue and have a lot of cash on hand. Talking about Google, Amazons of the world, they're being able to just use their money to make more money, of course, as they always have. And they're not being punished by these rates going higher. They had them before, but they're not being punished now. We're in the middle of a business cycle where we have really high GDP now, but rates are rising, and we're expecting that GDP to come in dramatically next year as rates go higher. So companies that are spending money to make money and have a lot of debt and don't have a fantastic cash flow, those companies are finding a much harder time within this earnings cycle. So even if they're beating, on the EPS, they're still the revenue's not there. Those companies are getting punished this earnings cycle.
Good to know, Joe. Thank you.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.